Where we are now, we're going to double, we're going to double again, we're going to double again, we're going to double again. Bitcoin's going to continue to progress to $1 million a coin, $2 million a coin, $5 million a coin, $10 million a coin. And when it's $6 million a coin, there's going to be a bunch of people really angry at themselves that they didn't buy it at $1 million a coin. And so I think once you understand it to be the center of the financial universe, right? It's basically the fulcrum around which we all generate leverage. It is the frame of reference of all value and scarcity.
Bitcoin represents a paradigm shift in the world of assets. Its finite supply, capped at 21 million tokens, with over 93% already in circulation, is a fundamental advantage. This scarcity is akin to traditional finite assets like gold, making Bitcoin a powerful store of value. What's truly revolutionary about Bitcoin is its classification as property. This offers significant legal and tax benefits. Many countries already recognize Bitcoin as property, enhancing its security and credibility. Bitcoin has been one of the best-performing assets since its launch in 2009. The upcoming Bitcoin halving in 2024 is set to reduce new supply, historically triggering bull rallies. This, combined with growing institutional interest, sets the stage for unprecedented growth. Bitcoin's resilience is notable too. It has survived bans, controversies, and various attacks, showcasing its robustness as a monetary system. According to Michael Saylor, Bitcoin is the best property in the world and the most superior asset. Let us now dive into the video as Michael Saylor breaks down the property value of Bitcoin as compared to real estate and other investment options. As you watch, make sure to hit the like button, subscribe, and drop your comments below.
You can never have enough Bitcoin. I think the right way to think of this is Bitcoin is going to grow in a serpentine pattern with rapid burst of growth, some drawdown, but on an exponential curve. Right now it's like 45 or 50% compounded annual growth for the past 3.5 years since we got involved. And I think it'll just continue to grow at a high growth rate between 20 and 40 or 20 and 50% for the next 1 to 2 decades. And it'll gradually, the overall long-term growth will probably go from 45% annual to 40 to 35 to 30 to 25 to 20. And it'll hit a terminal growth rate of like 15%. And when it hits that terminal growth rate, maybe 20 years out, maybe 25 years out, it'll be growing twice as fast or compounding twice as fast as the S&P index or any other diversified, high-quality portfolio of assets you could buy. So if you think about it like that, you just say, well, where we are now, we're going to double, we're going to double again, we're going to double again, we're going to double again. Bitcoin's going to continue to progress to $1 million a coin, $2 million a coin, $5 million a coin, $10 million a coin. And when it's $6 million a coin, there's going to be a bunch of people really angry at themselves that they didn't buy it at $1 million a coin. And so I think once you understand it to be the center of the financial universe, right? It's basically the fulcrum around which we all generate leverage. It is the frame of reference of all value and scarcity. Once you get that idea, then the logical thing to do is just to continue to sweep your cash flows into it from month to month to quarter to year to year. You could call that dollar cost averaging, or you could just call it, savings. But, there's no end in sight. I mean, if I told you could buy Bitcoin at 100,000 and it was going to go to 6 million and you were going to get 60x your money, then why wouldn't you? I think that the industry is going to be very dynamic. To be clear, if I had $1 billion right now to invest, I would buy Bitcoin. I wouldn't buy anything else. I wouldn't buy a building. I wouldn't buy an altcoin. I wouldn't buy a power company. I wouldn't buy land. I wouldn't buy real estate. I wouldn't buy a sports team. I wouldn't buy a Picasso painting. There's nothing on earth that I would buy other than Bitcoin if I had that money. I think everything else is risky. I don't say you can't make money in those other businesses. You can. Bernard Arnault makes money in a lot of businesses I don't understand. And so I respect them all. It's just I don't advocate or endorse any of them. I think that if you're the best in the world at something, you know it. You don't need me to tell you. And if you're the best in the world at something, you should go do that thing. You'll probably make money in it. What I believe is if you're not the best in the world at something and you simply want to make an investment and forget about it for 100 years, you buy Bitcoin and just be very careful about, how you maintain the keys or how you custody it so you don't lose the keys and the like. And then the market will do the rest of the work for you.
Santander Private Banking International, part of Spanish financial services giant Banco Santander, is offering high net worth clients with Swiss accounts trading and investing in the major cryptocurrencies Bitcoin and Ether, according to an internal announcement seen by CoinDesk. Over the next several months, Santander will offer additional cryptocurrencies that meet the bank's screening criteria, the announcement said. Santander said the service is provided only upon client request through relationship managers, and the assets are held in a regulated custody model in which the bank stores the private cryptographic keys in a secure environment. This is a bold move given that most big banks prefer to be twiddling around with tokenization and tend to avoid exposure to open access blockchains and the cryptocurrencies that run on them.
When you think about investments that you're going to hold a long period of time, the two that stick out are, should I buy a diversified portfolio of companies like the S&P index, or should I buy a bunch of real estate? And if you buy real estate, like real estate in Miami Beach went from $10,000 an acre to $10 million an acre in less than 100 years. So that works out to be a 7 to 8% growth rate per year, every year for 100 years. And if you have that perfect portfolio of stocks and they're very competitive, then you might get something similar. But when you look at it, investing in stocks is very complicated. Like, name a company that'll still be here in 100 years. Like, how do you establish the S&P index? So if you take a 3-generation or a multi-generational view, it's kind of hard to figure out how I would buy a bunch of companies and hold them 100 years. But on the other hand, holding property for 100 years is very straightforward. The royal family of Japan, or the royal family in the UK, or royal families in the Middle East, they just buy up all the best property and keep it for hundreds of years, right? How long has the British royal family had the center of London? 500 years, 1,000 years, right? The emperors had the center of Tokyo, 1,000 years. So holding the middle of Manhattan, or holding, if I could basically, you remember, I walked through the botanical gardens in Sydney, and I thought it's the most beautiful thing. What if you could own it? Like, what if you could own that entire garden? I don't know, what is it, 50 acres? It's spectacular. Would you ever sell it? Probably not.
You could probably afford to buy it now.
Yeah, but like 500 years ago, right, someone came along and it was there. And so now property is a good investment. And the reason property goes up by a factor of 1,000 is because if you look at it, what you realize is politicians can't make more of it. You can't print more property. The garden is the garden. The Sydney Harbor is the Sydney Harbor. You're not going to wake up and find out that there's 100x as much beachfront property as there used to be. So when the money supply expands by a factor of 100 and the number of acres on the beach in Miami Beach stays the same, the price per acre goes up by 100. And that's why property is a good investment. The problem with property is you have to buy it in chunks of buildings at a time or acres at a time, and sometimes the best property isn't available for sale. The second problem is there's property tax. So if you owned all the property in the middle of Sydney, you're going to get taxed on it by the mayor and by the province and by the country. And a lot of times people can't afford to pay the property tax for 100 years. And then if someone zones your property, or if there's a war, what if you owned the nicest property in the middle of a war zone? What if you owned all of the nicest property in Ukraine, in Kiev, right? It might be devalued by the war. It could be devalued by a pandemic, by an earthquake, by a tsunami, by a tax. And if I handed you $10 million and you lived in Africa and you had a choice, buy $10 million worth of property in Zimbabwe, anything in Zimbabwe for $10 million. You could pick anything you want in the entire country and buy it for $10 million. Or would you rather buy Bitcoin, $10 million worth of it? Well, the property in Zimbabwe, maybe it's scarce, but it could be impaired and it's not mobile. And maybe you don't want to live there. And maybe the people with the money in 100 years don't want to move there. So it's not clear that you'll be able to mortgage it or rent it or sell it or carry it with you. But on the other hand, Bitcoin is capped. Bitcoin is like Manhattan in cyberspace. It's 21 million city blocks in a cyber Manhattan, and one day 8 billion people will want to live there because everybody in the world, all 8 billion people in the world want to be wealthy. They all want to keep their money. There's no one that doesn't want Social Security and economic well-being, not from now to the end of eternity. For 1,000 years, people are going to want the money.
The CEO of Binance and Bitcoin analysts are among those who have started to draw attention to the halving event as the crypto community looks to the bullish event with hope after a cruel crypto winter. The crypto community and many of its most high-profile players have started shifting focus toward the Bitcoin halving, an event that occurs every 4 years and cuts the market supply of new Bitcoin in half. At the next halving event scheduled for April 2024, the Bitcoin mining reward will reduce from the current 6.25 Bitcoins per block to 3.125 Bitcoin per block. Binance CEO Changpeng Zhao took to Twitter to set the countdown for the next halving in an X, formerly Twitter, post to remind everyone that the next Bitcoin halving event is only 135 days away. Historically, the Bitcoin halving is linked to bullish momentum for the Bitcoin price due to supply and demand dynamics. The halving of new supply amid growing demand usually pushes the Bitcoin price to new highs in the months following the halving. 2 months before the last halving event in May 2020, the Bitcoin price was trading at less than $10,000. As the event drew closer, bullish momentum saw Bitcoin price surpass the previous cycle's all-time high of around $17,000. After the halving, the Bitcoin price broke into parabolic momentum and created an all-time high at almost $69,000. Popular trader and analyst Rec Capital also took to X to elaborate on the different phases of a Bitcoin's bull cycle. The analyst divided the timeline into pre-halving and post-halving events, highlighting that approximately 60 days before the halving, a pre-halving rally tends to occur as investors tend to buy the hype to sell the news. However, a euphoric price surge in the pre-halving period is usually followed by a retracement around the time of the actual halving. In 2016, the pre-halving retracement was 38%, while the 2020 pre-halving retracement was 20%. The pre-halving pullback is often followed by a multi-month reaccumulation phase during which the Bitcoin price rises and falls with little gains during a period of stagnation. Many investors get shaken out in this stage due to boredom, impatience, and disappointment with their Bitcoin investments' lack of performance in the halving's immediate aftermath. The accumulation phase is then typically followed by a parabolic surge, in which Bitcoin breaks out from the reaccumulation area to hit new highs. During this phase, Bitcoin experiences accelerated growth on its way to new all-time highs. Do you think Bitcoin would ever be valued at $10 million per coin, as Michael Saylor pointed out? Let us know of your predictions in the comment section below. Make sure to hit the like button. Subscribe and turn on notifications. Thanks for watching.